Hi, Warriors. New week. Thank you.
Uh, Coach, we can barely hear you. Like,
Oh, it's fine.
is that Dale or Ryan? Was that you?
Yeah.
No, not me. My mic was on
Oh,
mute.
yeah. Dale, we can't even hear him at all.
How about now?
Yes, yes, yes.
Okay. All right. Yeah.
Good morning.
Yeah. Hi. Glad everyone could hear me. Good morning, everyone, or good afternoon, good evening. New week. So don't chase and let the trades come to you this week. Everyone agree with that? No FOMO this week. Just be patient and let the market come to you. All right.
Always, always.
How are you, Ingmar and Brand? How are you? Another war, yeah. Syria, like every week, there's something else going on there. RC, Forex Gal, James Groom. Okan's here. He's going to be our guest at the bottom of the hour. We'll get an on the ground view from Turkey, what they're thinking about uh, Syria being on their border. So it's going to be great. I didn't plan it, but that's where Okan trades from. Yeah. Okay. So, Providence. So let's talk about what's going on today. China's really the big story. You're getting a big pop. That's why the Aussie is up. Let me just switch screens here. And here it is. Okay, so that's the FXI. Here's BABA, which is kind of like, Amazon. So we're getting these big pops in China. So let me start with Ryan because I'm a creature of habit, and that's what I usually do.
Morning, Dale.
How are you, buddy?
All
So,
good.
getting this nice pop in Aussie with what China did. Will the RBA put a quash on it? I would. This to me is a little bit of a message. I would buy the next break to new lows, um, rather than looking to buy, euro or cable. Even though the charts look stronger over the last few weeks, I
Yeah.
think this is a tell that Aussie finally is showing something here. So new lows in Aussie are going to be a nice shot, I think. Metals
Yeah.
exploded. Yeah. So what do you think of the
It's
Aussie
showing
here?
it's showing a bit of hopium on this China
Okay.
news, which this China news isn't really much at all. Despite how the news wires have spun it. Yes, they've changed their rhetoric for monetary policy for the first time in 14 years or whatever. But it's if you've been living unless you've been living under a rock for the last 6-12 months, they've done nothing but cut rates, all the rates, create bond buying programs, buyback programs, house support programs, cutting ratio of second mortgages, and all this palaver. So now to just turn around and go, oh, we're not doing prudent monetary policy, we are now doing moderate loose policy, is a bit of a as Michael Brown said, shut the door after the horse has bolted.
Okay.
And the market's taking it like there's going to be another flood of stimulus next year, which they've already said they'll probably do anyway. So we're up a bit on hopium. Aussie dollar, as Kay mentioned on the flow show, probably a bit of squaring up ahead of the RBA as well. But I can see some further upside for the Aussie if the RBA stay with the same message that they're not ready to cut yet, because the market's pushing the envelope on that thought at the moment.
Okay. I noticed your 731 level was a great number.
Yeah, I didn't actually touch it because I thought we were going to get a bit of a blow through while it was
Yeah.
knocking its head on that 727, 728 for the last 2 weeks. Um, I'm still interested, but I'm less conviction on it.
Okay. I want to tip my hat first of all to when Gregor was here Friday after the NFP and the Dixie was lower. It was, some people were saying we were getting a breakdown, and we were on euro. We were talking about euro, and he said, you know, it's having trouble here. And then Steve said, when we had the breakdown earlier, the day isn't over, and the day wasn't over, and ended up with a pretty big reversal. So there you go. That's experience. All right. So you can't learn it on your own. You could learn it from other people, but that's why Steve has a pretty good hit rate, is because he waits for confirmation and doesn't get FOMO because something's happening after a news event. People who buy headlines today sell newspapers tomorrow. Come and get it. Syria fell. Come and get your issue of today's magazine.
As we say over here, Dale, today's newspaper is tomorrow's chip paper.
All right, got it. So big rally in yen. Let's bring in Mr. Yen of Forex Analytics. And that's Kman.
Morning.
Morning, buddy.
How
So
are you?
we had pretty good. We have some legs to 52.
I may suppose so. If you look at the yen crosses, they've come bid again since the start of last night. And I was we were discussing again the outlook for the Bank of Japan and what they are saying. And this week we may actually get a few hints. They tend to send a little bit of a warning into or a bit of a scud into the market some at times ahead of the central bank meeting, but seems like it's catching up on risk on the one hand, and again, Dale, when we're talking about you find a level there it trades. I mean, look at what it did, like in those low 149s again,
Yeah.
and yeah, it's now you're like trading 150 points higher. That what it is doing most of the time. You get one decent move and then you correct pretty sharply straight away after. And I trust we are going to be in similar kind of situation unless something happens to the dollar this week over CPI. But we're going to be in a similar situation until the Bank of Japan. That's how I look at all those yen crosses.
Okay, I look at it as maybe we completed something or completed three, and we fell 800 pips. So, you know, for it to rally back 400 pips off 49 would just be corrective action to me that I'm looking to sell into if it gets there.
Yeah, but I think that you're going to be a lot of company if it gets to 152. I
Yeah,
think the market will
that's
still be
okay.
looking at it. And also look at what's happening in the rest of the dollars, the dollar giving back some of its gains
Yeah.
after the jobs report. So yeah, if we get there, it's probably going to you're going to have company there around 152, I'd say.
Yeah, I guess you could also say if the dollar takes out Friday's low, I don't think you want to be long dollars.
No, no, that's
Okay,
true.
that's probably the most important line in the sand there. That
Yeah.
we'll see if this is a hope low or a low that could generate another move to the upside. So,
I think it would be more significant if we break below it before the CPI comes out than over actually the CPI. Of course, CPI will matter a lot, but for the viability perhaps of the move, it's perhaps more important if we break it even before, because then that would mean that something is changing towards the dollar, perhaps over the whole of year end, you know?
yeah, I guess China came in and said they were buying gold again.
Yeah.
So when they stopped buying gold, they got their break to buy. So they must have some gold to sell. And
Why
they're
would they have
telling the
gold to sell?
market, huh?
Why would they have gold to sell?
Because they flash what they're doing and the market coattails them. They when they stop buying gold, it may be by announcing that they got to buy gold $300 cheaper.
Well, it's reported in their reserves. I mean, PBOC is not there to. Well, I mean, a central bank. Okay, PBOC may be a bit special, but they are not there to play the markets like they do. I think they are just diversifying their reserves. And I mean,
Well,
if we recall back in November, there was this period where I said like, oh, look what's happening, and Asian session is gold is trading
strong.
higher again,
Yeah.
and now it shows in the reserves. But there's not only PBOC. I think there's a lot of Asians in the market that may be getting interested again. And let's not forget.
Silver looks a lot better.
Oh yeah, looking a
And
lot better. Yeah.
the gold silver ratio last week gave us a false breakout. That looks pretty bad. So, that
Maybe the theme for the year end,
yeah,
maybe
yeah, yeah.
2 good weeks to trade into year end, 2.5 weeks, and maybe
Yeah. There's some stuff that between 2 and 280. We'll see. That's where I thought it would go. I don't. Some people are saying this is important for a move to new highs, and I keep an open mind, and it could be because of the pattern that's on this daily. It's a weekly. What's missing, audience? What's missing in silver? Yeah,
Third drive.
That's right.
Third drive.
Yeah, John Francois. You should say, you one drive. That's my French accent.
Well, first of all, I've talked to Jean-Francois and in person a few
Okay.
different times, and he does not sound like that. He's a French
Oh,
Canadian.
yeah, that's right. I
You're
interviewed him.
now you're just putting people in buckets, Dale.
All right, well, just call
fair.
me Pepe Le Pew. Okay, just call me Pepe Le Pew. All right, Blake. Well, that's kind of my look around the board.
Cool, man. Hey, well,
Yeah.
you said you said something on Twitter, and I've been up since really early this morning. It's
I'm
so
not
funny.
sleeping either, but yeah.
Well, no, I slept well. I got up this morning, and one of the things I had to do is I had to book a bunch of profits. So if you guys aren't in the trades room,
what a bad way to wake up.
well, I took my Euro, Kiwi, and Aussie longs off. Now I'm looking at my Aussie saying, maybe I shouldn't have done that. But, I still got my sterling, and I was long Canadian yen from Friday, so I'm still long that. I'm up like 80 pips now. I took all my profits off the table, and I usually go walking at this time in the morning, and then I left my sweatpants upstairs, and I'm like, man, I don't want to go breaking into the room and waking up my wife because I don't want to wake her up while she's she's trying to sleep. So I forgot to put them down here in my office anyway.
Yeah.
So needless to say, I've been up since 0 dark 30 this morning. It's still dark here, and I'm sure it is over there for you too.
Yeah.
But you were saying something on Twitter, and I want to get some clarification here that you are bearish stocks now.
That I am bearish stocks?
Yeah. You think the consensus trade of the stock market going up in a year end is wrong?
No, I'm just taking the other side. They could be right, but that I'm taking the other side. I'm short Nvidia and Google. So if they couldn't bury me last week, let's see if they could bury me this week. I'm not taking an S&P short here. But I think that, between here and, 61, 65. I talked to Jim and all last week. Well, with all the updates, breadth did not improve or make a new high.
Yeah.
So, I think there's a shot.
Google I think you're in the right spots. I mean, look, you're taking shots at stocks that are just lagging at this point. So,
well, Nvidia wasn't until after earnings, and I think it's the most crowded trade on the board. And I think everyone owns Nvidia. Maybe everyone doesn't own Google, but Nvidia was Bitcoin last year.
Okay.
And they've had no reason to get out. That last break held in August. So they're talking 200. So anyway, we'll see.
Yeah, no, thank you for the clarification. I was,
Yeah.
like I said, I saw that you were talking about that, and I wanted to get your inputs there. Now, speaking of people talking about things, I was listening to
Oh,
obviously the Flow Show this morning. If you guys don't listen to the Flow Show and you listen to Ryan and Kman, you should. That's the first thing that I do in the morning is I get up and I listen to these guys over CNBC, everything else. I'm perusing, different websites, Reuters and Bloomberg and blah 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 blah, searching through, Live Squawk. But I'm listening to these guys because they've already been up hours, like literally hours before me, and they're disseminating the news. So listening to these guys live and them they've already cut through all this stuff is really important. So if you guys don't do that, you should, make sure you're listening to Ryan and Kman. So let's bring in Ryan really quick. I want to talk to you about, this goosing of you. You made a really good comment here, and you can see the Aussie bounced really off of this 2022 trend line. I was long in anticipation of this. I didn't expect to wake up 50 pips this morning. Last night when I went to bed, it had already slumped, and yeah, we'll probably get down and test this, trend line and blah blah blah. And then all of a sudden, I got up this morning and we're up, right up in our face. You talked about China, and you talked about these comments. These are monetary policy comments that might come into play, but also this week we have their economic conference or conference economic work, whatever they call it. That's on Wednesday, I believe. So there's a couple things that could move the needle, but you brought up the US dollar, Swiss franc. So can you go through, or Swiss franc, I'm sorry, the Chinese yuan, renminbi.
Yeah.
Can you go through your thought process here on what was going through your head this morning?
Yeah, as I said to Dale, it looked a bit of a hopium trade, just a language change. Got the market thinking, oh, there's more coming, which they've already said more might come anyway. And the second thing I looked at after looking at the Aussie dollar was dollar China, because it hasn't done anything, and that really tells you the story of how important that headline was.
Did you watch the trade-off show with Chris Weston this last week? And I even gave you a hat tip there to your US dollar CNH.
Yes, thank you very much, mate. Yes,
yeah,
you
called it. You called it spot on, man.
A dollar tip will be better, but a hat tip's just as good.
Well, you live pretty freaking far away, so I'm just gonna have to give you a hat tip and a golf clap over here. But no, really great call, because you've been looking at this inverted head and shoulder pattern we basically completed. So if what could change your mind? Like, I mean, I'm sitting here looking at the Aussie. It's sitting at highs on the day, and it looks like it's going to rip shorts heads off. That's what it looks like to me. This is a very impulsive move. If my name was Gregor Horvat, I would call it impulsive as an Elliotician. It looks like I'm going to rip your head off type of rally right now. What would change your mind here? Is there something you need to hear from China this week that could really do that? Or we have the RBA tonight, right? Or tomorrow?
Yeah, I think the RBA will be have more of a say in this one than what we've had. Several groups and meetings in China, this group, that group, the other group, and it's all come out the same sort of lines. They're going to be supportive, so I don't expect anything huge to come. And as I say, we know they're in easing mode. So unless they cut rates this week in a surprise, I don't see much coming from it. I think the risk is more the RBA. And that's even while I'm still short Aussie Kiwi. I thought that was well on its way last week, but that's been ripped higher in this move as well. So yeah, I don't want, funny enough, I don't want the RBA to turn dovish tomorrow, because I'm trading what the market is now trading. That's the expectation of the RBA turning dovish. So if they turn dovish, that will probably ruin the expectation trade for me. So if they stay their line, I can see Aussie dollar popping a bit higher. And if it does so in Aussie Kiwi, I'm going to add back to the shorts, because I've been slicing and dicing on the way down.
Gotcha. All right.
That'll be valid for Aussie versus US dollar as well. If you get a rip up 65s, maybe there's probably a big queue waiting to tap that on the head up there.
All right. Well, great calls all the way around, Ryan, and thank you for that, and thanks for the updates this morning. Speaking of really great update, Kman, I want to bring you in really quick because you said something this morning on the Flow Show, which got my attention, which I'm I want to jump on board with what you're saying here, and I totally I can totally rationalize your thinking in the markets, and I think it's really important. Can you explain to everybody? We got so many central banks coming up this week,
Hmm.
right? We've got, well, not just this week, over the next couple of weeks, next 2 weeks, but this week we have the RBA, we have Bank of Canada, we have Brazil just met, right? I'm thinking. We have who else we have? We have the Swiss National Bank, and you said something pretty interesting and about central bank and really dovish expectations going into this. What are your thoughts here? I think everybody needs to hear this,
On which one in particular, or all of them?
or all of them,
All of them.
because of somebody coming into office next year.
Yeah, I think that
Good clues. Very good clues.
that's what
Very.
I've been saying already a couple of times. I think a few central banks are going to keep some powder dry until his royal orangeness takes the seat again.
Come
And
on, man.
Oh,
Now you're being racist towards orange
I'm
hair
not
people.
racist at all. I'm just no.
Okay.
I'm just
I'm joking.
noticing the
I'm
color
joking.
of his hair. Come on. I mean, he's calling a redhead racist? No, not at all. I mean, everybody can call me bald. That's not a problem. Um, no, so yeah, I think some of them will want to keep their powder dry, and among which I think the Bank of Canada may be one, because
Mhm.
everybody is expecting, or a lot of people are expecting them to do 50 again. And we know that Maclem has been very dovish for quite a while, but his deputy governor is not really. And maybe she can persuade him this time to do only 25. So my global feeling on what's going to happen with the central banks is that we are going to have not the extreme cuts, like for instance, Canada could do only 25. S&P, people are expecting them to do 50. I think it's a bit over the top because 50 would take them below inflation, which is equivalent to go into negative real rates. I'm not sure whether Schlegel is already ready to do it. And so a bit similar to ECB, people were thinking 25 or 50. So it's keeping me all, for most of them, it's keeping me in the reasonable expectations camp right now. And I think they will want to keep some powder dry for when Trump takes the seat and having to react potentially then. No, that is just the feeling that I have for this round of central banks.
No, that's interesting because and now let's tie this all together really quick. And Cayman, I think that's a unique, not say unique. That's a great idea. And I could see exactly that. I mean, every central bank is now trying to figure out, okay, we have 4 years of dealing with, the Trump wild card, and we don't know what to expect. Well, I mean, they have expectations, but things could get obviously a little bit crazy. And so to keep their powder dry a little bit going into the beginning of the year would make sense. Now, going back to Dale, your idea, Dale, and idea of like some of these tech stocks are underperforming. If central banks just are not as easy as the market hopes and believes they're going to be, that's going to be a headwind for equities into year end. Now, I'm still in the camp that asset managers are going to be chasing, but maybe some of that will be offset by tighter central banks into year end. And again, we're dealing with this over the next 2 weeks in real time. I mean, it's not something that you can go, okay, well, maybe that's into January or February. No, this is over the next 2 weeks. We're going to be dealing with a lot of central banks meeting. And that could really alter sentiment going into the end of the year. So that's something I think we should all be talking about and talking about a little bit more. And once again, Ryan Kman, great job on the Flow Show. I think it's wonderful. You guys are always talking about these types of things, and each and every one of you that are listening in right now should be listening to that show in the morning. And if you can't get up early, like me, I can't get up at 2 o'clock in the morning to listen to that. Listening to the recording after the fact, whether you're on X or you listen to the Zoom recording or on YouTube, make sure you guys go and do that. All right, real quick, I want to talk a little bit about some one of the positions I maintain and I'm going to maintain is my sterling long, and I've been long since last week. I've been picking up since the low 126s. I had to redraw a little bit because I had this blue line here, and I'm always the first one to admit, look, when I do technical analysis on assets, I'm constantly changing my viewpoints because what I say and what I think isn't always right, and I'm very keenly aware of that. And I have to try to assume what everybody else is looking at. So my original inverted head and shoulder pattern looked like this. I kind of redrew everything after today's moves, and I think that inverted head and shoulder pattern looks something more like this, which this is good because now I personally trading sterling long, I know where I'm worried. Like I already knew that if sterling broke back below this, whoops, I didn't want to move that. Let me readjust that. If sterling moved back below this channel support, I wouldn't want to be long anymore. But now I can kind of tighten up my parameters and say, if we get much below 127.20, I'm probably going to start booking profits and just take a, I'll probably still have, up 20 or 30 pips. I'll probably just take that off the table versus, sitting around too long. So that's how I'm looking at the inverted head and shoulder pattern. So what I want to do is I'm going to redraw this how I see it. And I think this is how I'm going to play it from here. So just so everybody is aware, for those of you that are on the long side of the whoa, that's not what I wanted to do. I have it drawn incorrectly. Sorry, guys. I got the wrong thing. But that's something that I'm doing right now. Ryan, do you have any thoughts about the Bank of England? They meet next week, right? I believe they do. If I'm not mistaken.
I can't remember. I've lost track of who's meeting what.
next week.
Next
they
week.
are meeting next week. Yes.
I think we get the CPI data next week as well. So that'll be the next one before the Bank of England. I think I'm just struggling to get through what's happening this week, let alone next week.
Right.
Yeah, but I don't know. We've got the same old battle between the Hawks and the Doves. Will they hold? Will they go? What will they set up for next year? As usual, they're all over the place. They don't know what they're doing, and if they don't know what they're doing, we don't know what they're doing. I'm keeping a close eye on more on Euro Sterling though, because that had a couple of goes at getting over 83. It hasn't. We keep trying to get under 82, 75, 76. Keep failing to do so. That's the next big level. If we see a hold under that, then we're probably heading to the low 82s, and then we get into some big old levels down there.
I mean, that's dangerous looking. I mean, I just zoomed out to 2015. I mean, this is some really, really big supports down here. I mean, we start getting much below these levels on a longer term basis. Like, we start spending like weeks below these levels, and it could get a little squirrely for anybody.
What's the range? What's the range and measured move? So call it.
I mean,
just
it just
range.
takes. Yeah, I mean, I would just look at something like this,
Right,
I mean,
right.
12 big figures.
Yeah, I mean,
70?
72 to 82. That's 10 big.
We'll be
figures.
as old as Dale by the time that happens, I think. But the next big level is around the low 82s. 82.15 is the 50 fib from the 2015 2020 move.
Yeah.
So that's a big old level. But a move under this 82.70 area would indicate a potential range break. But we've had a couple of goes at that.
Well, I'm enjoying being long, the cable right now. So I mean, if something like that happens, I mean, cable's trading at 145, 150.
There's one central bank you guys didn't mention today, that the Syrian central bank had an open house yesterday. Okay.
So Dale, what's your take on this Syrian situation? And I know we have you have your guest here, so maybe you can give us a quick update on how that could move the markets. And in the meantime, while you're doing that, I just want to mention thanks everybody for being here. Make sure you stick around for Dale and his interview. He'll give you he pays attention to the geopolitical environment probably more than most. So Dale, what's your opinions there?
More instability. It's almost like things are melting everywhere, so here we go, another failed state. I don't know, people could say, well, it's a hit for Russia. I just, Israel went in, they bombed Damascus. They're taking over the Golan Heights, which Assad used as an area to attack Israel. So, I just think it's more uncertainty.
All right. Well, it's gonna be really fascinating to watch how that develops over the course of the next few months, I think. And guys, just heads up, if you didn't get my thoughts on Bitcoin, go watch the week ahead video. Shouldn't be chasing up here, in my opinion.
No.
But you should be buying dips. And Dale, have a great interview. Ryan, Kman, thank you guys for your service today. You guys are great. And Dale, I'll catch you on the flip side, and I'll catch everybody else on the Morning Edge in 45 minutes.
Thanks, Stream Team.
Thanks, everyone.
Ryan, Blake, Okan, welcome back. What a coincidence that we get to talk with what happened with Syria falling. How are you, buddy?
Exactly. Thank you. Can you hear me firstly?
Yeah, got you loud and clear. So, what's the feeling? What's the feeling on the ground in Turkey with this recent development of Assad falling and Syria being carved up and attacked?
Okay, from Turkey's perspective, what has happened seems to be positive, because there are about 3 million refugees living in Turkey. And so they think that, and the government thinks that they will be leaving soon, because hosting 3 million people with another about 7 million others from different countries is a very, very difficult task. We have about 10 million people living here, which are not Turkish citizens.
Right.
So it's a very big load on Turkish economy. So at least if part of them go back to their own land, and because the reason why they came to Turkey was obviously because of
Assad.
Assad, yeah. So right. Now that Assad is gone, so it's a good opportunity for them to leave. So we take some rest, because we have about 3 million of.
So you don't have to have a mass deportation like they're planning here in the U.S. They'll just go home. Yeah. So someone said Turkey helps Islamists push to power for their own relief. What do you think of that?
Say again, please. What they say?
Someone just commented, majority of, I guess he took it off. All right. Anyway, everyone's looking behind the scene for conspiracy. Maybe Turkey helped these guys so they could have relief. And
actually, that is true, because Turkish government has been promoting the soldiers, the groups, who actually took the city. So that is not wrong. It is true.
Okay.
But the reason why Turkey had to do this is because we had to protect the borders against the terrorist groups on the northern Syria. So they were kind of sending bombs and missiles and things like that. So we had to be able to stop them. We had to get into the country for about 40 kilometers. So when we did this, we obviously had to uh, promote the soldiers living in Syria who are against the Assad regime.
Okay. All right. So positive development from Turkey's point of view. We'll see. I don't think anyone's going to miss him. Why don't you tell me about what's top of mind for you as we head into year end, Okan? Did this weakness in the euro, I think it went a little deeper than you thought it would on this pullback here. Last time I talked to you, I believe that you thought we'd have a pullback towards 106 or 108. I'm not exactly sure, but what's the difference? What are you looking for now in the
Yeah,
dollar and euro?
well, in fact, from fundamentals point of view, I'm by the way sharing with you my screen.
I got it.
Yeah, from fundamentals point of view, my view doesn't change because fundamentals don't change so quickly. But also, the fundamentals continue to show that the dollar may weaken going forward. And I'm going to present you the reasons why this can be the case. Well, first of all, when I was talking the last time during this presentation, your presentation is that um, I was expecting the euro dollar to move to 120 in the medium term, and but during that time, I was not expecting that Trump would win the election.
Win.
I thought that
Okay.
he would not come to the power.
Okay.
So after he came to he took the office, things changed dramatically. But this is I think, transitionary.
Well,
Uh,
we were heading down from 112 pretty good before the election. I mean, we were already at 108. I mean, we peaked at 112 only a month and a half ago or so,
yeah,
right?
but in the last, uh, during the last month of e- election,
Oh, people were
just before
front
the election.
running. Yeah,
Yeah,
they were
people
front running the trade. Okay.
exactly. You got me very
Yeah.
well. Yes.
Okay.
So euro dollar started falling just, I believe, during October, right? So in
Yeah.
October it started falling,
Right.
but now, do you realize that the euro dollar has stopped falling? And there are some good reasons for that, and I want to talk about that.
Okay.
First of all, if you look at the screen, you see my chart. I have I'm showing you four panels there. On the top panel, you have the euro dollar and the net positions of the euro currency reported by the CFTC. All right, so this it is showing minus 55,000, roughly minus 55,000. It used to be plus something. Now it's minus, so the market is short. But if you take a look at the euro dollars um, stochastics indicator, it is showing that the euro dollar is still weak and it may continue to weaken. That's for sure. But also, if you look at the third panel, where you will see the relative momentum index of the net positions reported by the CFTC. So please note that the third panel is not showing anything with the euro currency, euro dollar. It's not the indicator of the euro dollar. It's the indicator for the net positions uh, of uh, of the CFTC, the net positions of the euro reported by the CFTC, and it too is showing that there is some further um, margin for the euro dollar to go down a little bit more.
I'm thinking
But
102-ish.
yeah, yes, it may fall to 102, even 101.
Okay.
I don't believe it may go below par. par value.
Okay, well, you see, that's a sentiment I want to hear. I want to hear the euro is going to finally take out par by the majority.
Well, it may or it may not. It may, if there is too much option positions, if there are too many like short puts, maybe. But
I don't think
um,
so.
so I don't think so either. And
Yeah.
there are also different reasons why the euro's fall may not be permanent or continuous. Is the volatility indicator, which is the bottom level, the bottom panel. As you can see, that's the volatility indicator for the net positions reported by the CFTC. So I believe that from now on, the volatility is going to start falling, which goes in line with that the net positions will start to uh, either increase or stop its fall. So now the net positions are at 55,000. So maybe it may go as low as maybe 65,000 or maybe 70,000, but not below that, because the volatility indicator to fall from this level here, um, one should expect that the net positions, the short net positions, should start to slow down, which means that the sell-off pressure of the euro dollar will eventually stop somewhere. Well, where is it going to stop? I think it's going to stop around 101 level, maybe
Okay.
102,
You know,
101.
you and I would do a lot of technical work, but you do a lot of fundamental stuff, Okan. And I've heard it really clarified as easy as this, that if you just listen to what the administration wants for the dollar, they usually get what they want, going all the way back to Robert Rubin when he wanted a strong dollar. Almost every administration early on has a position on what they want to see. And that lines up eventually a weaker dollar with what the incoming administration wants here in the U.S., a weaker dollar. So they're
Okay,
going to be careful what you wish for. I think
yeah,
they're going to get it. Have you noticed that administrations can usually get their way about where they want the dollar to go in the U.S.?
exactly, exactly. I mean, they are the people who are, in the driving wheel of the economy. So eventually, yes, they will
So
get
how
what
do
they
they
want.
do it with the rates by hammering the
Yeah,
Fed to keep lowering rates? How
yeah,
do
well,
they
that's
accomplish it? Creating a confidence crisis where no one wants the dollar, piling on more deficits. How do you, as an administration, generate a lower dollar?
well,
Intervention?
I can. Well, the intervention or rate hikes or rate cuts, they are all just tools. But the decision making is something different. They're just tools. I mean, you can depreciate the dollar just simply by um, creating some fear on the dollar, right? So if you
So it's
create a
all
fear,
jawboning works then.
yeah, yes.
Okay. All right.
And also, can I show you something else here?
Sure.
I just want to switch to another chart, which will actually give you a better understanding of what I'm trying to explain.
Of
Not this
course,
one, but
Professor Abar,
oh, thank you.
a
Okay,
doctor.
okay. Here's the thing. If you see the chart, right? The black
Yeah,
chart.
yeah,
That's showing the chart of the euro dollar minus the US, the spread between the US and China PMI. All right. So this line, the
interesting.
white line, is sorry, the blue line is showing you the spread between the PMI of the US and China. So if you notice that they move together, right? So when
Yeah,
the PMI falls, the euro dollar falls. when the PMI rises, when the PMI rises, the PMI differential, I mean, the spread differential rises in favor of dollar, the US, I mean, the euro dollar goes up, right? So if you notice that nowadays, the euro dollar after 2022, the euro
Sideways.
dollar, yeah, it went sideways, but the differential of the PMI stuck where it was from
Yeah.
2023, early 2023. So it's
Yeah.
still in the same region. So this suggests me that there might be a good reason that I mean there could be a situation that the euro dollar may continue to fall to follow this blue line. But at times, however, when this blue line is below the is above the one, as you can see now, it's around 0.96. Can you read that?
Yes.
So when it goes above one level, it means that the US is growing faster than China. So if the US is to grow faster than China, then you need a weaker dollar, right? So you want the dollar to be weak. So nowadays we are approaching to this one level.
Yeah.
So if this goes, and I mean we're going to see this next month, if the spread between the US PMI and the China PMI goes about one, well, actually, this is the ratio. I mean, this is spread, but I divided these two numbers.
Yeah.
I divided the US PMI by the China
Right.
PMI,
Yeah.
and if it maintains about the one level, I mean, you can see that either transitionary or continuous, you can see a weakness in the dollar of the dollar.
Yeah.
But because now this is flat and it is still at the level where it used to be in early 2023. I mean, yes, there is still some way for the euro dollar to fall, but at times when the spread, I mean this ratio is above one, you can expect transitionary reactions from the euro dollar going up.
Okay, so our inflation has to run hotter than China to get a dollar rally, which means higher rates to support it.
In
Because we're
fact,
talking PMI, right? PMI.
yeah, this is PMI. It's nothing to do with the inflation, but of course PMI is associated with inflationary pressures. Yes, so if PMI of US starts to rise faster than that of China, then you may expect a weaker dollar, either transitionary or or continuous.
Or the weaker dollar causes the PMI spread to change.
Yeah, of course, that's
Because
also
the
possible.
tail wagging the dog, who knows which one
It's
drives
true,
it. Yeah. I
true.
wanted to ask you, because I know you've been a silver bull for a long time, and you're right for a huge run, and we've seen consolidation. Gold-silver ratio broke down last week in favor of silver over gold. You have a view on the PMs here?
Well, the gold silver ratio, I look at the gold silver ratio along with the DXY, the dollar index.
Yeah.
And now that the dollar index is increasing in the last 2 months, especially, you would normally expect the gold silver ratio to rise. So in that case, if the I, I mean, given that I expect that the gold is going to maintain its current levels going forward for the next maybe 3-4 months uh, uh, until people are certain about how fast this Fed is going to decrease the rates, to cut rates. That's going to take some time for people to understand. So during for the next and assuming that the DXY is going to maintain its strength going forward in the next couple of months. So then, so you can expect the gold silver ratio to
head back up again.
yeah, exactly. So it may get.
So you have targets in Dixie on the upside.
Maybe 2% more.
What's that? 109.
109, yes, about 109. But I do not expect 1010. 110. I don't think 110.
And your view on risk going into 2025?
Let me talk about that. I think that's in the last slide. Put that in the last slide.
I'm a bind reader.
Yeah, exactly. You are. Okay, look, this is S&P index.
Don't do it. Don't do it. I just read your mind. Don't do it. You'll get in trouble.
Well, I have
Go
to
ahead.
explain to others.
No, I'm kidding you. Go ahead.
Well, yeah, the S&P index is on the top panel. You see this skyrocket. It's going up.
It's going up. It's parabolic.
Yeah, and notice that there is almost no volatility. I mean, it's just straight line, 45 degrees.
Yeah.
So that's crazy. Well, that's okay until today. But look, we have under the bottom panel, we have we have this red line and the orange line. Orange line is my proprietary indicator, which has to do a lot with the 2 and 10 years treasury spread.
Okay. All right.
Okay, but and it's forecasting what the Fed is going to do. You notice that it starts falling, and then about a year later, the Fed started cutting the rates. So this green line is the Fed rate, Fed funds rate. This orange line is my forecaster, and during the we see that the Fed is going to continue to cut the rates. That's for sure. But the question is, there will always be a question as to how fast is it going to be. So as long as this question remains, this purple line, which is the Deutsche Bank Currency Volatility Index, when this index, the volatility index, the currency volatility index, it rises, you may expect the S&P to fall. I mean, they always move against each other. That's
what's had me bearish is I believe we had a failing rally in US dollar yen. Okay, up there at 150. Yes. Okay, and that eventually it's going to take out 140, and that's going to be the carry trade unwind 2.0. Is that what your chart is saying at the bottom? The yen crosses go first, and then the market.
Yeah, that's very parallel. I mean, I really didn't think about that, but it's not.
Well, let me coach you, doctor.
Okay, thank you. Okay.
Anyway, you could call me Dr. Pinkert. Anyway.
Okay, Dr. Pinkert.
Okay, no, well, it's cool when we have these talks to collaborate. If I was just a typical host, I would just ask you a question, and then you'd give me an answer, and then we couldn't dig into breaking it down into, something more tactical. And that's why this again was a great interview, and I especially like when you agree with the positions I have on the books, because I think that your analysis is excellent. So I wouldn't be seeking you out to fade you, Okan. Okay.
Okay, thank you.
So people should follow your work. I notice you have some stuff going on X. Is it all in Turkish? How can
it's in both languages. It's in English and Turkish.
All right.
Sometimes in French.
Did you start something new since I last talked to you?
Yes, I started editing my newsletters and putting them in my website called anatoliafutures.com, where you can read my insights, and you can also follow my insights on the LinkedIn and the Twitter, the X.
Okay. And what are you looking for? Subscribers?
Uh, not
Or
at this moment. No, I mean
okay.
just people can come in, and if they want to know about what my insight is,
Okay.
they can just
You
simply
don't
read
need
it.
you don't need money.
Well, of course, I need money.
No, well, I mean,
Who know, who doesn't
you
need
don't
money?
need it. You don't need it anymore. You have all
Yeah,
those Turkish, you have all those Turkish liras you put away 10 years ago.
yeah.
Do you have
That's
any
fine.
of that? Huh?
A lot, a lot
All
of.
right. Well, okay. I'm just saying that so, it could happen here to Americans too. If
Yeah,
you're right
yeah,
about 120, who knows, euro, maybe it's 130. That's a 30% hit on the dollar. So,
yeah.
we haven't experienced that in a while. Anyway, great catching up with you, brother.
Thank you, Dale. It's always great to talk to you and exchange ideas.
Yeah, have a, great end of the year and beginning of 2025. And what are your expectations for the U.S. under the new administration
Well,
without being
under the
political?
new, okay, it's going to be difficult for the entire world economy to maintain a parallel move with each other. I mean, there will be divergences, a lot of divergences in
Yeah,
different parts of the world.
yeah,
Speaking of the stocks, okay. So because
yeah.
I think that in 2025 there will be a lot of capital movements from one part of the world to the other, and
Where do you think
this will
it's going?
well in the first half of the year, I think a lot of money is going to go to US again. It will continue to flow into US
Okay.
until the central bank's policies are well determined. Now that the central bank's policies are not still, they're still different. Yes,
Yeah,
everybody are seeking, or every central bank is seeking to cut the rates for
yeah,
sure,
yeah.
but the difference will come from the timing. So you'll
They'll
see
be in more of a hurry to do it at a faster pace. It's all about pace. The rest of the
exactly.
world, just like China today, the rest of the world will be cutting rates faster than the U.S. Is that what you think?
I missed the last bit of your word.
Oh, okay. That the rest of the world will be cutting rates at a faster rate than the U.S.
Yes, as a faster rate than the US,
Yeah,
because, for example, China
right.
is struggling. China is struggling to grow, and it has to grow. Europe, it is also struggling to grow, and they have a lot
It's
of
struggling to not disintegrate.
exactly, yeah, exactly,
I'll tell you, man.
almost, yeah.
Yeah, we got a lot
So,
of stuff. Things I've never seen more pots on the stove on boil
yeah,
in
yeah,
my career.
yeah,
And I've been
like this year.
in my career. I'm never like this.
Hmm.
So anyway, and I've been doing this a couple hundred years. So
Yes,
anyway, brother, it was nice catching up with you, Okan, and I'll get a hold of you, and we'll be speaking in a different world
yeah,
next year.
yeah, exactly. That's true.
Thanks for
Hopefully.
sharing your stuff. You could follow Okan on X at Okan Abar, AYBAR, just like his name. Smart guy. Okay. So um, that's a wrap, my trading warrior brother. Thank you for being here today.
Thank you too, there. Have a
All
great
right.
day.
Okay. It's Okan Abar. Follow him on X. Check out his writings. They're free. He does need money, but not right now. So keep that in mind. And we always have a good time and laugh when we get together because it's not, we have to have fun too, right, guys?
Right, exactly.
All right. So don't just count your pips, count your blessings, everyone. And see you for Turnaround Tuesday. They're thanking you, Okan.
Thank you,
Adios.
everybody. Thank you.
All right.
Have
See